I hope everyone is doing good today. We're going to jump right into the charting. And just like always, we're going to go in alphabetical order. So if you're looking or waiting for a specific stock, we're going to go from A to Z basically. So we're going to start with Apple. And just like how we've been doing this every week, when I chart, I like to start on the larger time frames to have a better overall visual as to where the stock is sitting based off historical price action. The reasoning behind the orange, which is 174 a share, we had multiple rejections with filled candles, wicks. A lot of people say, why don't you raise this up to the wick on top right here where my cursor is moving? I am very heavy on finding levels that have multiple interceptions or inceptions with wicks correlation, filled candle correlation. I like how we have this wick outside of the 175.11 candle beforehand on the daily, the wick on top there. When we pull this back a little bit, we have a few filled candles, a wick right here, and then we have two wicks back to back in between the day with the shooting star that failed. And then, of course, the main support that tried to hold from the previous first time all time high for Apple. So that's why I have that 174 level in there. Going off the current price action right now, last week when we talked about Apple, I was telling you guys if we flush under 177, I expect us to fill the gap to 174. And of course, if that breaks and doesn't hold underneath, we should push back up to recontest this 177. So using Apple's visual from what I see right now, whenever a support breaks on the downside, I want to see a resistance retracement hit that. So a support to resistance flip. What I mean by that, when I switch down to the 30-minute here, since we were on a massive support for Apple for almost a week straight, around 177 a share, once we broke out underneath that zone of consolidation, notice the next day we pushed back to that zone, failed it instantly, came down, tried to hold at 174 area, had a slight intraday bounce, kind of failed around 1:30 p.m. Eastern, broke underneath. Now that we are back above 174 level, trying to hold, depending on what futures do tomorrow night, aka Sunday, that will play into effect on how Apple will open at 4 a.m. Eastern into market open at 9:30. I would like to see for a call entry, I want to see us hold above 174 a share for Apple. If you're looking to buy calls anywhere where this white highlight is right now that I'm moving, don't look to buy calls or puts midway through when it's a 50-50 shot. We have a gap on top, and I'll change the color for this. We have a gap on top here, which is going to be the resistance, historical support, like I talked about just a few minutes ago. And then we have a massive support at this 174 level. And I'll change this to blue. I want to see us hold 174 for calls, push to the upside, fill the gap back to 177. If we just gap up to 177 off open, I want to see a rejection and a pullback off that 177 level. Historical support now should act as another resistance based off the double top if we have another one from Thursday. So I would look for puts if we don't close above 177. If we close above 174 on a pullback, I want to get calls and ride up the gap for the 177. So now looking at AI, and this has been a stock that we've been talking about for a while now. And I was telling you guys last week when we charted this, I was mentioning how if we recontested the now resistance, if the PA is underneath $35 a share, that's going to be a rejection zone based off the historical support that tried to hold right here. So we tried to hold that level at $35 a share, and we failed, dropped underneath. We recontested and tried to push back to the upside, and we showed more resistance on that level, breaking down back to $30 a share area. Same issue with Apple. We broke underneath, pull back above. So AI could hold this 29.7 area, aka $30 a share, possibly fill the gap back to the upside to $35. If we break underneath this $30 share level on AI, I'm going to switch the daily for this visual idea for you guys. Notice how we have this little bounce right here. Then we rejected. So we went from a support bounce. Once we broke underneath, we came back up and rejected that same level as a resistance. Look at all these wicks in between here. I can get that to stay. There we go. We try to break up, failed. Try to break above and hold, failed. Try to break above and failed. If we hold this level on a pullback, that would be a very nice support to load, and that's roughly around $27 a share or so. So for AI, if $30 a share, aka like 29.7 area, if that can hold support this upcoming week, look to long calls up into $35 a share or so. If we break under this 29.7 area, look for a bounce or a gap fill to at least $27 a share just to have that fill on PA. Do you think Apple will reach the 177 within a day, or do you think we should take a swing? So everything that I say is based off just like gap fills and levels. I'm not saying it's going to happen. I'm just giving the hypotheticals. With how Apple moves, when I look at charts, I look at how price action moves for the given stock that I want to see move. I can't compare NVIDIA's price action moves moving 20, 30 points a day and say, oh, Apple can move 5, 6 points. Apple can, but it's very unlikely it moves that big so quick. We could fill the gap to 177 Monday, Tuesday, Wednesday, or maybe we never fill the gap and we just keep dropping. Logically, off how Apple moves, it would take at least 2 to 3 days. It can move $3 up in a day. I get that, but there's going to be a lot of possible selling pressure come Monday. I do expect the market to have a slight retracement to the upside, slight push overall. So this could happen pre-market if we gap up. It could happen Monday off open. I would just be careful because if you try and get calls on the break of 177 to the upside, it could just fake out, just like how the same thing happened for this back here. Support broke, push back upside. Support broke, push back upside. So don't let a wick above think that calls are going to be the move above 177. This could break above 177 and then pull right back down like what happened on Thursday off open. So I finished AI, but I'll reiterate what I said real quick. So if we don't hold 29.7 area, I expect a gap fill to support at $27 a share. If we hold above 29.7 a share, I do expect us to push upside to $35 a share just to fill that gap and keep those lower highs going off of that bearish trend. So now moving over to AMD. I'm going to go to the 4-hour. Actually, let me go to the daily just to show you guys what's been happening. So we broke outside of this rising wedge of the higher lows, higher highs. We've had the same situation happen before. We broke out on the downside. We hit a nice support level, and then we gapped up heavy, pushed massive back-to-back days. We filled the gap that I told you guys about this past week. If we break underneath 101 a share, is going to be a massive support based off what we tried to break out back in, what month is this? March of 2023. So now we're at that level. Historical resistance, if we take it back a little bit more, look at all this resistance right here. We've tried to break and hold above this historically. So now that we're at that level in the current time frame, we bounced off it. We're back above 105 a share area. We could see upside for AMD. The issue you have to think about, though, look at all this historical support, which is now going to act as a resistance level if we push. So this white highlight is going to have some type of price action or rejection as we push up into it. So if we can't hold around 105 a share, I do expect us to fill the gap back down to 101. If we can hold above 105 and possibly break out of this 107 to 108 zone, I'll put a level here just so you guys can see the number on the other side. If we break out of this white dotted line area, we will fill the gap to 110 a share for AMD. So now going over to Baba. China stocks have been iffy with all the news coming out. Is the news real? Is it just a scare tactic? We don't know for sure. Just with going off price action, Baba has basically filled the gap from the last overfill from the nightly push up right here. So we're at that price action where we closed on the daily and we filled that gap overnight. So now we're actually at that price action zone. Could we possibly bounce here? Could we go lower? When I'm looking at Baba in this area, the biggest thing that I see, we have rejection, same area, try to hold support back here. So we're in a zone that's acting as a support for us currently. Does this make sense to you guys? Why I put this white highlight here? We had massive support on a heavy pullback. right here. Multiple days to try to break under and it couldn't. Too much buying pressure. Historically, before this, we had a rejection, rejection, and then massive support right here on a heavy wick down that got bought up instantly. Could this be a dip buy opportunity for Baba in the current moment? Could we go higher? I would watch this just to see if we can hold around $86 to $87 a share. If we break under that, I do expect us to fill a gap to about 82 to 83 from the previous lower high right here. And I'll make this highlight a bluish just so it stands out better. If Baba can hold 87 area a share and not break on the downside, I expect it to fill the gap back up to this 91.50, which was the rejection we had earlier in the week. We broke underneath, pushed back upside, rejected that level. So we have two good areas. If we hold this 87, we'll push upside to 91.5. If we break under 87 and can't hold, I truly believe we'll fill the gap pretty quick to around $83 a share for Baba. So now looking at coin. Coin obviously runs with Bitcoin. There was a major sell-off from SpaceX getting rid of a lot of Bitcoin. I don't know exactly how much it was, but it was enough to make Bitcoin drop massive. I believe it was on Friday or Thursday. So Coinbase is in that rejection area right now. 375 million. Thank you, bro, Mr. Trades. So coin right now is underneath 75.50. I was talking about last week how if we break under 85, we're going to have that retracement to the upside. We tried to push up at that 85.3 area, rejected it quickly, had no buying pressure at that 75.5 area. We tried to hold a little bit. I'm pretty sure on the 30-minute, we'll probably see a little like wick and whatnot, but it wasn't enough, and now we're rejecting it on the resistance side. At this point, we need to add a level underneath now. So if we keep rejecting 75.5 a share on Coinbase, this is when I go to the daily chart and I just want to find like a good overview zone that we could possibly put a level around. This is when I just look at every candle, all the wicks to see if there's a nice zone. It's not a pinpoint. It's just trying to find a relative strong area to put a level from underneath. I'm kind of liking it around right here, around 67 area. So the reason I'm putting it around right here, I can actually lower it slightly. There we go. Let me make this red. Delete this one, go to the 4 hour. So the reason I put this level right here, outside of this chop, you have to understand when we break out and we reject the levels I already had, the 85.3, 75.5, we never held on these pushes, massive rejects. And then intraday in between, the dailies that push, reject, once again, double top, reject, these are the zones that held in between this double top both times. That's what we could not break and hold. Once we broke above that zone around 66.6 to $67 a share, that was the area to keep an eye on for those pullbacks or possible rejections again. Let me go back a little bit farther. This support right here, tried to make it go higher up, consolidation, break above, consolidation, fail underneath. Every push rejected that zone. It wasn't a dead point, 66.64. I put stuff in for zone correlation. So I understand why it's there. It's not a pinpoint. It's just an area that I know, okay, if we come down to this red line, that 66.6 area, we're going to act it as a support and we're going to bounce off it. That's what we're using that as. So going back to the current and looking at Coinbase, if we still fail underneath just the 75.5 area, I expect us to pull back and possibly touch or bounce off of 66.6 a share or so. If we break back above 75.5 for Coinbase, I expect us to fill the gap to 85. But before we do that, there may be some consolidation right here. A little hesitation, possible sellers are going to hit. I'll put a level here just so you guys can see the number on the other side. Roughly 81.2 a share. So upside, if we break 75.5, we have a TP of 81.2 and then 85.3. If we reject 75.5 and keep going down, we should fill the gap to 66.6 area a share, $67 a share. So moving over to Costco now, I'm going to switch to the daily real quick just to show you guys what's been going on. We try to break and hold above the lower high from the all-time high with Costco. As we formed these lower highs, higher lows, at this zone, we cannot hold above. I love using these wick outs from the lower highs as resistance or support as price action flows into it. Notice where we're currently at for Costco at the next level at 541 a share. I told you guys last week, if we fail at these levels, we're going to easily pull back to 550, 541, 526, 510. We're filling the gaps from the historical rejections as it made lower highs. So as Costco approaches this $541 share, we should show buying pressure. And if we don't and we flush underneath, we are very quickly going to fill the gap to roughly 526 a share. If we can hold above 541 on Costco, we are going to fill the gap, which was historical support, which is now going to act as a resistance at $551 a share. If we can test 551 and show some slight selling pressure that is restricting it from going higher, I would short this at 551 a share for Costco back down to 541. So now looking at First Solar, FSLR. I'm going to go to the bigger pictures to show you guys what we just broke down out of. We broke out of the rising wedge, higher lows, but focus on what I just mentioned with Costco. I love using historical higher lows, lower highs, whatever the case may be, for possible dip buys. Notice where we currently are based off the previous higher low on First Solar, where this blue highlight is. If we hold this level, this is a logical bouncing point. So I'm going to put a level in here. I want to find correlation with other stuff that could play into effect. I'm liking it around right here. The reason I put this level, and I'll change the color to a greenish. The reason I put it here exactly is because of this rejection. We tried to break out in the middle here and rejected, then we finally broke out. This happens for a reason. These wicks in between the days of the breakdown, and it tries to curl. 2 days after the curl, it rejects, pulls back again, forms those trends of higher lows. I like to see those in between before the breakout. Same thing goes here, holding support. Fake out underneath, pushed right back up. The very next day, notice we opened it open, dropped, bought up instantly. So this level around 180 a share, that is going to be a massive level for First Solar. Using that in the current price action, that is where we're currently trying to hold. I'm not saying, oh my gosh, we're at 180.7, get calls, hurry up and get calls. Wait and see how this reacts. We could easily have another move like this where it breaks under and flies right back up. Watch the energy sector, watch to make sure that overall that sector is doing well for First Solar to follow with correlation wise. If we hold 180.7, we should push back up. I don't want to say back to 195, but at least to where all these wicks were for support at roughly 190. So if we hold 180.7, I expect us to push back to roughly $190 a share. If we break under 180 a share, this is just, it should be simple math now, simple levels and whatnot. Possible dip to around 175 a share. So we had rejection, held support. If we break down, that will be the next support level. Okay, so FXI, China large cap ETF. I'm going to go to the daily just to show you guys this real quick. China's been very hesitant, very sketchy. A lot of news is coming out. So we have to be, I don't want to say cautious or like play with the news. Oh, bad stuff's coming out. Let's just short every China stock. Don't let that get into your like FOMO stage of I got to get in before it's too late. Just going off this ETF, there's not much going on right now because we're not really in a zone. The 4 hour, it's kind of shaky. The daily, it's in like no man's land. For my personal recommendation, I would wait to see how we react if we pull back to around this level right here, which is roughly 25.3 a share. If we pull back to 25.3, I would look to see if we hold with strength on buying pressure to catch the move back up possibly. As of now, we're like, there's no, like, what should I do right now with this ETF? There's nothing you can do. You need to wait for a level to contest that has historical reasoning. As of now, we're in no man's land. Only level we have is what I just put down at 25.3 and roughly around this area for a rejection, which is around 27.2 a share. So we're in the dead center. So don't think you have to force a play. When you see something that you want to play, but there's no like actual setup, there's nothing that's like giving you that consensus of I want to get in, I should because of this reason. You don't have to trade the stock because that's all you trade. If there's no setup, let it be. Come back in a day or two. Set an alert down at 25.3 and alert at 27. If the alert hits, start watching again. Because until then, it's all guessing. It's like a casino right now. Well, I'm going to buy calls because we dropped so much. Technically, we have a gap fill to roughly 25.3 area. So I'd be cautious with this. So looking at Home Depot now, we had that pullback that we talked about this past week back to 324 a share, which held as a rejection. Now we're back there trying to hold this support now. If we hold this, we are basically in a very nice setup right now. Kind of a cup and handle, deformed slightly, but we have the brim on top. I'm going to go back to the daily for this. I'm going to zoom in. I'm going to stretch this out. There we go. So we got a top part of this quote unquote cup possibly that's rejecting. We pulled back. We're holding the historical rejections, which is now acting as a support level at $324 a share. If we can hold this, we should at least fill the gap back to the upside to roughly, I got to delete a few of these, too much clutter, to roughly $337 a share, $338 a share. If we break underneath $324 a share area, notice the gaps we have where after we rejected, where was the next heavy rejection zone below that? Roughly 317 to 318 a share. As you can tell, we have rejections here, rejections here. I'm pretty sure if we go back a little bit, and I'll change this color to blue just so it stands out, there should be more rejections. Wicks, breakout, rejection back down, keep coming back, try to hold some support. So we have a little correlation, more so in the recent times than historical back in like 2022. But Home Depot has easy levels right now. You just have to play it by what you see. If we hold the 324.5, gap fill up 337. If we break the 324, we should fill the gap to roughly $318 a share to the downside. So now looking at IWM, I'm going to go to the daily for you guys once again. We're at a nice little bounce zone possibly. Nice little place where a lot of wicks have formed. We have a little bit of room still to the downside, but this zone between about 180 and $181 a share is going to be a massive dip buy if we actually break to that point. We're currently pushing up from the sell-off we had overnight Thursday and Friday, and obviously you guys saw the market push on Friday. If we can hold this level and make higher lows, we need trends to form. We can't just buy calls because, oh my gosh, we're bouncing. We need trends, higher lows. This is one thing I preach to you guys all the time. We want to see a reason to buy calls. We need a reason. We're not just buying it because, oh my gosh, a major green candle. Let's just buy calls because we already bounced here before, back in this area right here. This is not a good enough reason. A pullback may happen. Maybe it doesn't. If we push upside, we have a rejection zone at roughly $189 a share. And if we break back to the downside, we have 182. Breaking under that will lead us to 180 a share. IWM looking like it's about to bounce and form a left shoulder. Yeah, I think I know what you're talking about with the formation right here. And let me highlight for the people that may not see it. Now, let me change this color real quick. There we go. With how things are forming right now. Oh yeah, no, you're good. You're good. You're good. But yeah, so the right shoulder is trying to form right now. It's going to make higher lows on trends. The question is, can we reach that point of forming an actual pattern? As of now, we're in a state where we should push back to at least 189 a share. I would not expect it and just buy calls. I would like to see a pullback to roughly 180 to 181. If we pull back to 182 and we bounce there, that could be a nice indication for at least a low risk, high reward entry. to try and fill a gap up to 189 on IWN. Someone wanted the NASDAQ charted, so I'm gonna see what I can find with this because the main levels I see, which you guys know I love just doing levels. Nice one there. Nice one right there. One more upside up here. Okay. So with the NASDAQ, so we bounced off 13,161. Main support I see is roughly 13,087. If we keep pushing upside, I see resistance at 13,358, and then above that at 13,473. There's a lot of indecisive thinking right now for a lot of traders. I would not look into trying to catch a move on this right away. Wait to see if we possibly have a pullback that could stretch this down a bit. It's still going to make higher lows, obviously, but we are in a current like curl like we were back here that could just fail. Same goes for right here, right here, right here. So you don't want to assume we're going upside. Wait for a low risk, high reward setup. Trust yourself. If you're playing futures or just the NASDAQ with option shares, which is very dangerous, I would look for trends to form before entering, but these three main levels are the gap fills to the upside and also the downside. Roughly are in those zones or range. So looking at Lily, and I'm pretty sure this is all-time highs. Yes. So when I chart all-time highs, none of this matters. So why do I need the daily chart? I don't need the daily. Let's go to the 1 hour. Let's go to the 30-minute. Let's go to the 15-minute. There we go. All I need to see is the all-time high area. This is all I need right here. All this stuff down here, none of this matters. So don't let that like confuse you when you start charting stuff at all-time highs. When looking at the price action right now for Lilly, it's in healthcare. Healthcare has been very hot. We are up extreme compared to a month or so ago. So the levels that I've been talking to you guys about, 532. We had that pullback that actually held in pre-market on Friday. That's why I told you guys would have like the nice pullback area if we break above it. And then I put in a 538 level as well for you guys in case we did have that recontest from the breakout from the earnings report back on the 8th of August. Currently, the only resistance we have, if you're not using fibs or anything to find like actual percentages on the upside, the all-time high or roughly $550.50 area. I'll make that orange. To the downside, same two lows I just mentioned. Possible bounces around $538 a share, and then the main support that we have to hold, 532. If we don't hold 532, we're either going to fill the gap to 513 or at least the gap to $519 a share. Cautious with all-time highs. I don't know if anyone's going to play Lily, but I would just be very cautious. If we break 550.5, there's no telling how high we could go just to reject right back down. But as of right now, just looking at the trends, Lily is making higher lows and trying to keep higher highs. So could we fill the gap upside? And I'll do this just to keep it, see what happens. Something like that. We'll keep that there and see how the week plans out. So now going over to Meta, and I'm going to go to the 4 hour on this. So as you guys know with Meta, we were at pushing for all-time highs, didn't actually hit it. We attempted to break out at the $316 share area we talked about a month or so ago, and we've rejected that ever since. Tech overall has been very shaky, very hesitant. Since we broke this $290 share area, we made new trends to the downside. If we would have held this level that I had highlighted for you guys this past charting week, I told you if we bounce there, we're not in a bearish trend yet. We need the previous higher low to actually break under and hold for us to switch into a bearish trend to the downside. At this point, I would look for a pushback to 290 a share for a possible rejection, historical support bounce, which is now going to act as a rejection zone. If we do reject and keep going to the downside, I'll find a quick 2 support levels underneath. We got one roughly right here, which we've already bounced off of. And then I'd say around this area. So the first main support, which we've already bounced roughly in that zone, if you focus on historical areas right here, acted as support. And then before the support, it was rejecting. So we have the same bounce trying to happen just like it already has before. If we fail under 277.4 a share, we could fill this gap down to 260 a share, almost a $20 drop, $17 to $20 drop. So I'd be cautious. Tech is still shaky. I would be very hesitant. Wait for the low risk, high reward setups, pushes up to resistance, the short, drop downs back to massive support levels to go long on calls. I would avoid trying to play this in the middle stuff, hoping for a move upside when it's 50-50 guessing at that point. So moving over to MU, which is Micron. I'm going to go to the daily real quick just to show you guys what it's been doing. We're still making these higher lows. Yes, it's looking very bad, but we are still making that trend in formation. We have not broken down like how Microsoft, like Meta just did on the downside. So we're still trying to keep those higher lows going. When looking at MU, the zone roughly around $63 a share is a massive support, also a rejection zone, depending on where the price action is going into that zone level. If we can hold $63 a share, we're going to fill the gap to 65.5. If that breaks above, I would not be surprised if we catch that push up to $70 a share. MU is going to have responses to NVIDIA's earnings coming up pretty soon. So I would not look to long this unless you're very confident in what NVIDIA may release for their news and their earnings. Just going off the trends, it's still higher lows. We're bouncing off 63 a share. If we go higher, I'd watch for 65.5 and above 65.5, we should fill the gap to roughly $70.50 a share. If we break under $63 a share, same as Costco, just like with the charting, look for the next previous higher low, use that zone for a possible support. So we may drop down on MU down to $60.40 area. Around that zone, we could see a drop if 63 a share does not hold as a support. So now I'm over on Netflix. I'm so glad we caught this on Friday. Okay. So Netflix right now, we missed the downside. I told you guys if we don't break back above 435 a share, we're going to contest that 414 area, 415. We had a little bit of like, is it going to hold? Is it going to fail? But off open on Thursday, we flushed right through. After that flush, we touched the support level, which I told you guys about for 396 to 397 area. If we break under 397 zone, we should fill the gap to 372. That is a massive drop off. Please realize that. But notice how there's like no indecisive trading in between 372 and 397 area. Last time we broke above that, it was a straight shot up, no pullback, no buyers stepped in. I mean, no sellers stepped in for buyers to have to pick it up at 372 again. We never really had like a gap fill underneath like 387, 388 a share. So I truly believe Netflix still has downside. I'm not saying buy puts because Breezy said so. I'm just letting you know. I truly think if we can test that 414 to 415 a share as a rejection zone, I'm going to keep saying this to get this instilled in your brains. Historical support, historical support. Once we break underneath, it now acts as a resistance. If we push up, I want to grab puts on Netflix if it holds underneath around 414 to 415 a share. If we do reject that, I expect us to pull back to obviously the 397 and fill that gap to 372. If we break above $414 a share, 415 a share, I expect us to fill the gap back up to 435 a share. So now looking at NEO, and this has been on a nosedive ever since that breakout happened. So we're back to where we were on the trends right here. Back in the same zone. Notice all these historical wicks acting as rejections. Now is trying to hold as support. The trend that held before the breakout right here, my cursor's moving to where we currently are. We've dropped over $6, well, just under $6 a share, roughly $5.20 or so. At this point, do you want to hope and say, oh, this could bounce? We're approaching a level that could bounce. Or do you want to wait and see what NEO does? I don't want to give too much of an analysis for NEO only because $11.22 will be a rejection if we push back up. If we break above 11.22 a share, we should fill the gap back up to $12.43 or so. Downside wise, I don't want to say any levels, but outside of this highlight I just put in for you guys, roughly around $10 a share to $10.30, that should act as a support, but I would not promise on it. Going off the daily, we've had pushes on NEO that get like annihilated after that breakout happens. If we can hold support, there could be a nice push coming for NEO, but as of now, just notice where the main bounces have been. Roughly $9.50, $10 a share or so. So right now is not the time to just say, oh, we dropped so much, it has to go back up. I would wait a few days, get some confirmation, and then make your analysis based off low risk, high reward. So now look at NVIDIA, same as Lily. All I want to see is the all-time high area. I don't want to look at all that past stuff that doesn't matter. So just going off NVIDIA, we're making lower highs, but we're also trying to keep higher lows going. So are we squeezing? Is there a massive move coming? Obviously, there is a massive move because earnings is this upcoming week. There we go. So we have this like falling triangle, falling wedge, lower highs, higher lows, whatever you want to call it, different terminologies. There's going to be a move on NVIDIA coming up. Me personally, this is all biased. I don't think they're going to outweigh or do better than their previous earnings that they had that made them shoot up, what was it, like $60 to $70 after hours or $40 to $50 after hours for the last earnings. I truly think it's going to have mixed emotions, possibly a downside move. I'm not saying buy puts. I'm just speaking on what I think could happen. I would wait to see how this works out. And just like Mr. Trade said, anyone swinging is going to get crushed. IV's going to be spiked like crazy anyways. I would not even play NVIDIA. I play sympathy to AMD or Micron, whatever you feel is best. But if we keep making these lower highs, we're going to reject $440 a share if we push back up to it. Historical rejection. Once broke above, tried to hold support. Now it's trying to re-push back up, and it should reject $440 a share. If we break above $440, we'll fill the gap to $553. If we break $430 a share on the downside, we should fill the gap to this, let's make this yellow, $418 a share. NVIDIA is very picky right now. It goes one way, shoots back the other. It goes upside, drops right back down. I would be cautious and just be patient. Earnings could do anything. I recommend just being very hesitant with your entry, but use levels with low risk, high reward probability. That's what you always want to do. So looking at Oracle now, ORCL. I'm going to go to the daily just to show you guys it's at all-time highs. I want you to see this. So all I want to see, and as you can tell, I used to trade this back in the low hundreds. I'm going to take a few of these out real quick. So I'm only going to put a level at the previous all-time high, which is back here where my cursor is moving, just so I know. And then I want to put a level at the gap overflow from the daily breakout right here. Now I'm going to the 4 hour. So we have a main level around $110 a share or so. I'll make that red. And the previous all-time high, which is roughly $103 a share, I'll make that blue. Currently, if you want to call it a bull flag, whatever you want to call it, Oracle is making lower highs. It also is not broken the gap fill or filled the gap fill just yet. So we're kind of making like a falling triangle. Lower highs, same support level as of now. Trying to hold that zone. I would not be skeptical as to which way this could go, but if you want a quick analysis on levels, first rejection to the upside is roughly $118.30 a share. Going above that, I'm using this lower high off trend. That will be the next rejection zone, which is roughly $121.50. If you're looking for a downside move, I would just keep the rough $110 a share for that main support. If $110 a share breaks on the downside, it's going to fill the gap to 103.5. If 118.3 breaks on the upside, trends are going to switch to bullish in the short term right here. At that point, break of 118.3, it will fill the gap to 121.5 for Oracle. Trying to speed through this. We only got like 19 minutes. PLTR. So the daily time frame, just like NEO, all small caps are having those pullbacks right now. We bounced off this area right here. I'm not saying we're bullish or we're having like a support bounce. We need a break above $14.60 to go back into that bullish sentiment on the upside. This chop is going to be very iffy if we break above $14.59 a share, $14.60 a share. If we do break out of this white highlight I'm moving, where we've had a lot of chop, we're going to fill the gap to $16.10. And that's a massive, massive level, as you can tell in the middle. We held support there really well before the huge breakout. Once we pulled back to that $16.10, we tried to hold support here, and we failed right underneath. Once we failed, now it's rejecting. If we go to the downside on PLTR, I'm not going to add a level in between any of this right here. I'm going to keep it at about $10.70. All this stuff in between, there was no heavy pullbacks, no sellers that had buyers try and step in to keep the price up. It just made a continuous upside. No heavy sellers, buyers kept it consistent. I would expect this to like truly get sniped on the downside. This needs a break of $14.60 to fill the gap up to $16.10. If it doesn't, I truly think this could have a pullback to $10.70, but don't take my word for it. Are you buying any dips? I'm not buying any dips just yet. I'm going to still be waiting. I'm going to scalp calls, obviously, but I'm not going to buy dips on anything just long run. I'm just waiting for more like indication as to why I want to do it. And PayPal is back to lows when IPO practically. So with PayPal, I'm going to be talking about just rejection levels. As we're pushing up on PayPal, $60.60 a share will act as a resistance level. As of now, we're trying to hold the last fake break underneath. I truly think PayPal has some room to the upside, but a lot of people I've seen on social media are very, very bullish. I'm not saying like if they're all bullish, you have to be bearish, but I truly think it could be the same idea as what happened back here. Let me add an arrow. What happened right here with PayPal. Possible wick underneath, just to send it right back to the upside. So we need a break and hold above $60.60 a share. If that happens, we will fill the gap to $63 and about 30 cents a share or so. So going over to QCOM, I'm going to go to the daily real quick. We talked about this last week and we fell underneath. So just like with the China index, FXI, we're kind of in no man's land. When I say no man's land, I'm not saying like this is a horrible setup, just forget about it. All I'm saying is it's pick and choose. It's a 50-50 shot. Call us puts. Should I buy the shares? Should I short the shares? I would just wait for a lever. As of now, right here's going to act as a very nice support if we pull back to it, which is roughly $105.70 a share. If we pull back to that and go upside, but we have a resistance level at $115 a share. QCOM pays dividends. That is nice, 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 nice. So I'm just speaking on the chart, man. I don't know nothing about any of these companies. But yeah, so if we hold support on a pullback, $105.70 area. If we push upside, we have a rejection zone at $115 a share. So now we're looking at QQQ. Tech has been very, very, very weak. I'm going to show you guys a little something I just peeked on. So this white highlight you see, I'm going to put a level here, roughly around, I think right there. So I don't want to use these wicks. This wick on this red candle, it's a liquidity grab. It's probably not going to come back down to that level. It could, but you want correlation with multiple wicks, multiple candle fills. Find stuff that correlates. So I'm liking around $348.90 or so. I'm going to move this up just to make it a whole number at roughly $349 a share. I'm going to go to current price action now. So looking at the idea of the queue. We're currently trying to break back above the level I told you guys about with $358 a share. If we break and hold above 358, we'll fill the gap up to 364. If we reject and can't hold the 358 level, we're going to fill a gap down to about 349 a share. If you're shorting, you're holding a while, you can back with interest. Yeah, Brett Snipe. He had multiple trades, Mr. Trades, bro. But yeah, Brett did good. He did good. We'll speak on that later. So main support, $349 a share. If we hold 358, we'll push up to 364. Focus on the bigger picture gaps. Don't put levels every 50 cents. Focus on the fills that have to happen. We held massive support at 364, broke underneath, straight flush, and now it's trying to hold 358. Look for a pushback to 364 to short it. If we can't hold 358, we're going to drop down to about 349, 350 a share or so on QQQ. So now going over to Roblox. I'm going to go to the daily just to show you guys this. Same as PayPal, same as Disney. We're in no man's land. You're basically either hoping for calls to bounce or you're getting puts hoping for continuation. The main level I would focus on is around here, which is around $25.40 a share. Going off of a retracement to the upside, $29.74 a share is the first rejection for PT. Above that, if we hold $33.50, I would be very cautious with stocks that are doing stuff like this. Just straight nose diving. There's no clear indication what could happen, so I would just be cautious. That's just me personally. So now looking at RTX, same as the last few we've looked at. I'm going to put a level around here for a rejection. It's not a pinpoint, it's just a zone. We've had rejections, we had support tried to hold. Now we're currently trying to break back upside above that level. For support, there's not much confirmation to use. So I'm going to take this down to 2 hours, see if there's stuff on the smaller time frame. We can put a level right here. So when looking at RTX, we got a support in the smaller time frame at roughly $83.70. If we hold on a pullback to that level of support, we should fill a gap back up to $86.98, roughly $87. If we break above $87 and push, we should fill to the gap fill, which is going to be around this area to the upside. And that is roughly $91 a share or so for a push to the upside on RTX. So now looking at RY, and we're actually at that level we talked about this past week, $89.70. So using this, I would be watching it now for a possible pushback to the upside. $89.50 is showing what we talked about last week. I told you guys if we drop, that's the gap fill we should fill. We're trying to show buying pressure off of that. So if we do show buying pressure, we could retrace back to $93.90 area. If we fail under $89.50, notice how there's not much that could hold it to the upside. We've had massive wicks, so you could easily use a level for a fill underneath $89.50 down to $87 a share or so on RY. I'll go back to the 4 hour just to show you this real quick. I'll change these colors around. We're moving on to Starbucks now. So Starbucks is also in a position like PayPal, but this is at a massive support area, trying to hold once again. If we can't hold this on Starbucks, realize the flush with the gap fill. Look at the last time we tried to break down and couldn't. So that fill on the downside, it would be roughly a $7 drop down to $90.50 or so. If we can hold support in this area, roughly $97 a share, we're going to push back up and fill the gap to $100 a share on Starbucks. So now looking at Shop, we talked about Shop this past week. It filled the gap to $51.60 that we had. Going to the daily, I just want to show you why we put that level there. We had this heavy support level hold back before we made that curl on this cut. Now we're pulling back to that same level, trying to hold support. If we hold support, we're going to push back up to roughly $57.50 a share. If we break under $51.50 area, we may fill the gap down to this trend. And if we do drop down, that level is going to be roughly about $46.50 a share or so. So if we break 51.50, we may fill a gap to the downside to 46.50 area on shop. So now looking at snow, that looked the exact same as shop. That's crazy. Look at that. That's nuts. So shop right now is also at a possible bounce zone. It's everything is at a like make or break level. If you guys can't like notice that or anything. So with snow, you have to understand that we should historically have a bounce here, but if we don't, there's not much holding this other than around 134 a share, where the main wicks have been filled on the downside. So with snow, I'll keep it very short. We don't got much time left. We need to break back above and hold 148 a share or so. If we can hold 148 a share on snow, we should have a nice retracement back to the upside. I'm not going to say the 161 a share level, but I am going to focus on this intermediate in between, which is roughly 154 a share or so on snow. If we reject 148 and we can't hold above that level, I expect us to possibly fill a gap down to that 134 to 135 a share on snow. I'm going to come back to SPY at the end. So I'm going over to block now, which is SQ. Just like PayPal, same situation. We're at a massive support that I talked to you guys about last week as well. We're trying to hold here. We need a break and hold above the $58 a share. And then I talked to you guys about how if we do bounce here and show that upside retracement, we should have a nice gap fill up to $62 a share on block. If we do break under this support we're trying to hold, and weekly for this, there we go. There's a little bit of support, the same as where it was back here at roughly $52 or so. So with the idea of block, same as PayPal, same as Snow, Shop, whatever you want to talk about, we need a bounce. If we don't bounce, we're going to fill the gap to the downside. So now looking at SQQQ. I'm going to go to the weekly because I've never looked at this before, and that is not accurate because of the price movements. So with the SQQ, as SPY goes down, SQQ goes up, vice versa. It's a flip over. So right now, if we're just looking at the smaller time frame, since historical data is not going to help us too much, we have a nice level here from the breakdown before this curl happened, possible retracement back to $19.80. If we break underneath that, we have another nice level at $18.50. And the reason for that is this double bottom. And the reason for the level above, the blue level, is because of the failed breakout right here, which kept us in trends of lower highs. So currently we're trying to break out. A pullback to $19.85 could be a nice dip by opportunity, aka if this drops, SPY goes upside. So I'm expecting SPY to have a slight push. But yeah, it's SQQQ, pullback to $19.85, could bounce there, or we could just keep up trailing, which means SPY keeps going up downside while SQQQ goes upside. So now looking at TQQQ, which follows SPY. SPY goes down, TQQQ also goes down. I'd be watching for a retracement back to the upside if we have it. Roughly $37.50 a share based off support and historical resistance. If we go lower, notice this double bottom back here. We have a nice support level at $34.50 or so. So we either fill the gap down for support at $34.50, or we fill the gap to the resistance upside, which would be roughly $37.50 a share. So now moving over to Tesla. Tesla has been wiping out every level we talked about this past week. We broke down 230 a share, and then we contested 218 a share. We did not touch 208 or the $200 a share, but I was telling you guys, if we break 200 a share on Tesla, we're going to fill a gap to roughly 175 or so. If we keep seeing strength on Tesla for the upside, all we're going to do is fill these gaps again. If 118 holds above, we're going to push up to 230. If 230 breaks above and holds, we're going to push back to 240. These are the only lows you need that you see on my screen right now. These are the gap fills. These are the recontest. When they break downside, they recontest on the upside. They're all in correlation with each other. So going to Walmart now. We're at all-time highs. We're still making higher lows. Trends are still holding on Walmart. Overall, trends are higher lows. Going off the 2-hour. If we have a slight pullback, we have a level at $157 a share that has to hold. If we break $157, I do expect us to fill this gap that I talked to you guys about last week to 153 a share. That could be the make or break level for this to keep that trend going. If we hold the 157, I do expect us to push back to all-time highs, but we need a lot of momentum for this to happen. So looking at energy sector, XLE, we're still holding trends of higher lows, also trying to keep higher highs going, but we're slowly making a retracement to the downside. So at this point, we're squeezing with price action on the energy sector. If we can hold $87 a share on a pullback, that will be a nice dip buy opportunity to get calls or just watch other energy stocks that could go to the upside as well. If we hold 87, I expect us to fill the gap to $90.50. And at that point, we're contesting the all-time highs for the energy sector, so anything could happen. Moving over to healthcare sector, which is XLV. Just like energy, we're still making higher lows on the health sector. Price action still bullish. Going out a few time frames to the daily. You notice how if trends hold, we should bounce here. If we do bounce, we have a rejection at roughly 136 a share. If we break under this trend that we're trying to hold, this is when I use like the idea of like historical levels. The last higher low, and then before that, we have the main gap down to here, which is roughly the 129 a share area. If we fail the first possible contest on a support at roughly $132.50 a share, if that breaks, we should fill the gap to the downside, which will push us down to 129 a share on the healthcare sector. Going to ExxonMobil real quick. Historical rejection zone is now trying to act as a support in the current time frame for price action. If energy can stay hot, this is when you can use the sector for correlation. If you see XLE is pushing and ExxonMobil is kind of hesitant, maybe ExxonMobil is lagging behind the ETF that it follows with the sector. Just a little secret right there if you want to try that. Looking at ExxonMobil, we have to keep trends going with higher lows. We need a bullish sentiment to stay in place. A pullback would be nice. Possible pullback to the white highlight. I'll move this up so you see it better. Roughly $108.50 a share could be a nice dip buy opportunity for it to hold trend still. That's the lowest risk for calls. If we go upside, all we need to do is break out of this historical level that just happened at roughly $111 a share on the energy sector of ExxonMobil. Pushing upside's the same. $111 on ExxonMobil. If I switch this over to energy sector one more time, notice how the breakout's about the same as for chart correlation. Looking at energy sector, back to ExxonMobil. Same sequence is setting up. So now SPY, and this is what we'll end on. Looking at SPY, I was talking to you guys about the 436 level. Obviously, we're trying to recontest that now. We broke down the downside from the Thursday overnight flush into Friday open that pushed us back up to it. If we can hold 436, we will fill the gap back to 440. Psychologically, we'll fill it, and also just going off the chart, we'll fill it. If we reject 436.8 area, 437, and we go to the downside, I expect us to fill this gap right here. And this level price is roughly $131.50 a share on SPY. If we break above and hold 436, we'll fill the gap to 440. If we break above 440, will we break above and have that pullback? This is when I look for trends, and I'll end the video with this right here. If we break upside, we go to 440, pull back to 436.8, and then we break back upside to 443, pull back to 440. Notice the trends forming. Then we can possibly flush. After that rising wedge hits, people think we're bullish again. That's what you want to look for in these type of areas. Why is that? Why is that you are highlighting the gap areas? So I usually highlight them just so you like for charting issues, so you guys can see it better. I put levels with the highlight, but I do this so you can just have a better visual as to why. Because when I put levels in, it's not like, oh, $431.48. It's just in that area of 431 to 432. Why is that a gap area? It's only a gap because of these reasons right here. You're looking for price to fill the structure. So once we broke out of this level, we had a wick pullback that buyers picked up, wick pullback buyers picked up. Once we curled, we based out at that same area where liquidity was being grabbed at. So once we formed that base, this is a massive support level that could not break. And then same thing goes for the other direction. When we're looking at where my cursor is, we had a rejection, rejection, two rejections for a double top, and then we finally broke out. Guess what happens? We recontest that level again. Pullback, bounced off. Resistance, flip to support. Support right here, that's the gap that we could possibly fill if the 436.8 area does reject and we go back to the downside. It's just like the main gaps that I'm looking for.